Well, it's 6 minutes after six, so I think we should get started. We should not be waiting any longer. Let me put it on recording, and
This meeting is being transcribed and summarized.
I would imagine that all of you are FERM students, correct? Is there anybody who is not in the FERM program? Okay, so I would imagine that yes, you are all FERM students. So let me greet you and welcome you to 5323. And I would imagine I actually did not teach I teach two classes in the FERM program. One is in fall, the other one is in summer. I teach nearly half of each of the classes. This class will have 12 sessions, as you know. Normally we have about 13 to 14, but for special reasons which I'm not fully aware of, we will have 12, of which I will be taking 7 classes, and Professor Vladimir will be teaching 5. My 7 classes, I've already sent out the syllabus. By the way, we have about 11 students now, so I am missing at least 8. 3 of which have already informed me that they will not be able to attend the class. So the same rule applies that if you cannot attend the class because of personal or professional reasons, you will please simply inform me ahead of time. Today being the first class, let me also ask you that have you been able to, I know that you have been getting my email messages because I can see that all of you are here in time. And some, as I said, have not been able to make the class. By the way, can you hear me clearly? Okay, good. So, and as I tell you that it is not required that you be on video, but it is something that will help in the sense that it helps participation. It helps sort of, it gives you sort of feeling of, yes, everybody is connected. So if you will please be on video, unless there are other technical restrictions or difficulties because of which you cannot, I understand. Otherwise, I think that being on video does promote participation. There is no question about it. So I presume that you have received the emails and also that you have been able to actually take a look at the material that I have posted. Is that correct? Have you been able to see? Okay, I can see some of you shaking your heads. So this is given the amount of time we have. This is a pretty intense class simply because, um, first of all, I expect that none of the material here is new to you because I think that all of you must have had some exposure to options, which will be maybe the first two and maybe one more class. Now, I expect that some of you took 5408 with me last fall. Is that correct? Is there anybody who took the valuation class 5408 with me? Okay, so I can see that Julia did. So there will be not repetition, but there will be some, a little bit at least. Definitely the first two classes are on options. So I expect that, yes, there will be some repetition, but we will definitely be going beyond what we did in 5408. But there is going to be some repetition. But after looking at the exam and after looking at or interacting with some of the students, that were in the SMF, that means the Student Managed Fund. Is there anybody here who was in the Student Managed Fund? Anyone? Okay, possibly not. So I can tell from the student fund managers, some of whom are actually all of whom were in by 5408, that not everybody followed what we did in options. So I believe that the material that we will be discussing today, you possibly have already, I'm sure you have had in several classes. So I'll go through this material very quickly. But I think also that now I don't know if you had, I'll go through the syllabus in a minute, but So some of the material in the first two classes, particularly today, may be a little repetitive. Tomorrow's class is not. So I know that you have not had any material or any analysis and valuation of convertible bonds, which is what we will be doing next class. So at this point, it will be good to take a look at the syllabus. So if I am still good at, do you see the syllabus?
Yes, we do.
Can somebody speak up? I cannot
Yes.
hear anybody.
We
Yes,
see
we
the
Yes, we can see it.
Good, good. Thank you very much. I mean, I presume that you have already seen it before, but as you know, all of the classes will be on WebEx, and there here is the Harvard course pack. Now, all of the material for this class, not all, I will be bringing in my own stuff also, some of which you will see today, both PowerPoint as well as Word. Um, you will definitely be able to actually, those have already been posted. What has not been posted, and I will not be able to post for copyright reasons, I can project them, but I cannot post them. So it is absolutely essential that you get your own copies of the Harvard cases. I don't remember how many cases I have assigned. To get to all of this, that is the expectation. Now, obviously, as you know from the Harvard cases, that not everything can be discussed in class. So I will definitely be going through as much as possible, but you will be responsible for the rest of the materials. It is expected, which I do definitely do not expect today, as well as tomorrow, because of the I mean, you may not have had the cases and all that, although I posted this about at least a week ago. But if you do not have the cases, I will expect that you may not have the material or you may not have time to study it for the first two classes. So I will definitely go a little slower on the first two classes. However, the expectation is that you will at least browse and familiarize yourself with the cases that are assigned for the next two classes. And so it is definitely expected that you will be doing that. And I don't know if anybody has looked at the course pack, but I believe it is about $49.50, which is at a 50% discount to the students. That means that if you were to buy the same course pack yourself, it will cost you close to $80. So it is discounted for students that are in this class. Um, so let's look at the dates. There was some confusion about the dates, at least actually on my part, but I know these dates are firm now. The one date that was added at the last is the July 7th, and it says in-class group exam. I am not absolutely sure about that. It all depends on the progress we make. And let me just point out to you. So these are the sessions, all of which will be on WebEx online, and I have received a couple of three or four students that have asked whether the sessions will be recorded and posted. The answer is yes. However, as I said, participation in a graduate's class definitely is not required, but strongly encouraged. There is no doubt about that, that I will very much appreciate you coming to class. Um, so these dates are all firm at this point of time. The only thing is the July 7th date, which at this point is the in-class group exam. So one of the things that I did tell the program that I personally do not like is the long gap between my last class and the exam. So, but there is nothing I can do about it. I understand why they had to do it, because one of the instructors at the last moment said he cannot actually teach, which was a last moment adjustment. So this is a class that was assigned to him, which I am in two minds as to whether I will give them. What I may actually do is, rather than giving the exam on that date, I may make, none of this is firm. It will all depend on how the class goes, how we cover the material, how much participation there is, and how students feel that they follow the material. So, and as you know from your experience with classes that you may have taken, that this class and the exam is not taught as you should not expect end of chapter type of questions at all. The questions will also be case oriented. And so if you are familiar with all of the cases that are being discussed, then you will definitely be able to handle the exam. And remember, this is a group exam. So if there are basically five, let's say, I'm thinking of a group of four. That means that 19, there are 19 students. So I'm thinking about five groups with maybe all four of them will have four and one of them will have three. I will not make the group assignment tomorrow. I will allow you to express your preferences. If you want to form your own groups of four or three, you can do so by tomorrow night. I will announce the groups next Tuesday. So I'll give you a week to form your own groups if you want, but you must send the names to me. Now you realize that if there are five or six questions in the test, then if a group of three or four, you are basically responsible for maybe 1.5 questions. 3 hours for 1.5 questions is ample time. So if I use the July 7 as, let's say, a review session, just to make sure that the students are comfortable with the concepts and have not really forgotten, just to refresh your memory, I can do so. But then the exam will possibly be, I'll request Lindsay to schedule the exam that week itself. Obviously, attendance at the exam is mandatory. That means that you cannot just not attend the exam just because it is group exam. That choice, that option is not available. So how you break up the assignment is entirely up to you, whether you take 2 questions or 3 questions. I don't really care. Before, at least a week before the exam, I will tell you what the structure of the exam will be. However, you can definitely assume that each session will account for 1 question. So there will be 5 minimum, 6 maximum questions in the test. So nobody will have responsibility for more than two. Now, obviously, I understand that if you are going to do only 2 problems in 1.5 hour, 3 hours rather, that's definitely ample time. However, you may want to actually check everybody else's answer or help everybody else out in the group. So there will be time given for that. And if the students really want a little more time, if some of them say that we would like to start at 5:30, I don't really care. We can start at 5:30, but hard stop at 9 o'clock. Now I will talk more about the exam as we go through the semester. However, as you can understand, that this is a group exam, and of course with full online access. So you will have access to the world. I don't really care about that. However, collaboration between students and between groups is strictly prohibited. That means that if that this is just by the code of honor. However, there are ways to tell whether there has been correlation, coordination and collusion, and whether email or other Excel programs have been exchanged. You should not do that. I will remind you again before the exam that definitely is tantamount to cheating, which I expect you will abide by the code of honor and will not do that. That if there is an invitation, you will reject it. And if there is a request, you will reject it also. This is entirely up because the point here is this, that this is a risk management class. We all take risks in life. We all take face risks in time, risks in life. Helping others when you are not responsible for anything, it is your choice whether you will take that risk or not, or whether you will entertain others taking that risk and opportunity from you. That's the trust I have on you. Otherwise, I cannot actually conduct I monitor it. I am definitely, I'm not going to say I'm not interested in monitoring. I am definitely, I will be there throughout the exam, doctored throughout the exam. Questions directly to me will definitely be answered. However, please do not use your cell phone during the exam and do not at all correspond with any classmates outside your group. That's the rule that must not be violated. So violation of that rule definitely is punishable with extreme loss. So this is risk management. The rest is up to you. Okay. Feel free to stop me at any point of time, and I will be happy to answer any questions. So let's go to the material. And the material you will see is actually arranged in some form that I hope that it represents what we are discussing in this class. Valuation of options and convertibles. That's session 1 and 2. Session 1 is valuation of options. Now, and convertibles is convertible bond. Those of you that are not familiar with it, you will see that it is one of the most fascinating instruments in the market. It's not really widely talked about, but there are people who actually trade convertible bonds, and you will see why it is one of the most fascinating. Um, Now, I say valuation of options. However, I will show you with the, let me open the next Word document, and I will try to switch between the two if I can. There is actually um, a Word document which says option topics. Is that on the screen right now? Have I been able to switch?
Yes.
Yes, it
Good.
is.
Okay, good. That means that the switching is working. So, so definition and so this is basically the roadmap. Obviously, I will be, taking detours and all that. I will never be able to exactly stick roadmap, but this is the intended roadmap. Definition and terminology, which I'm sure all of you are familiar with. Basic values, time values, basic properties of options has to, that's mainly definition. Option attributes, you all know this: S, X, T, RF, risk-free rate, and volatility of annual stock returns. This should not have been here. I don't know how that happened. This is actually an option strategy that should not have been there. Then leveraging with options. Basically, what it really means is, um, I don't know why that it is doing that. Sorry. So let me see if I can do. Oops, no, it still will not take it. Okay, so what leveraging with options means, when you look at, I mean, this is now I should tell you that some of this material, not all, some of this material I have used last fall, meaning 4 months ago. And I saw no reason to change the numbers because those numbers are quite recent. That means that you will see those of you that may have taken the 5408 with me, may have some of this with you. But I looked at them and I saw that they are very, very recent. So there is no reason to change them. I did not, because changing them would mean that who knows if I what I what if I make a mistake. So I basically looked over them. They look fine, they look recent, and so I did not change them. And you will see that I used an example for leveraging with options. Those of you that do not know what this means will be able to follow it. Then option strategies, by far the most important topic today. Long short call, naked call, covered call, protective put, short put, collar, straddle, and then hedging with options, short call and long put. Then obviously put call parity. Option valuation comes towards the end. And in that option valuation, you may have already had what is called the two-state option pricing model or binomial option pricing model that you may have had with Jaideep Shenoy or some other professor. I will extend it to possibly 3 time periods, and I will go through that. We will definitely extensively use the Black-Scholes option pricing model. However, will not derive that. Then applications and strategies, basically the same idea as a strategy itself, Black-Scholes model and option tweaks. All of these are basically material that I expect to cover today. But as I said, my very first class work. So I will possibly not go beyond maybe 8:15 or 8:30, just so you have time to absorb those of you that are not very familiar with it or have become a little rusty with this material may have time to actually review it later tonight or tomorrow and come better prepared next class, which will be tomorrow. Now, I should point out once more that the original course outline that I distributed actually had dates, those that were changed. So they are originally 12 and 14, 19 and 21. That has been changed later on. These are the confirmed dates. These are the dates that are also on PeopleSoft. So please make a note that the earlier, very early email that I sent out maybe a week ago had wrong dates. Wrong dates meaning that I did not know that those dates have been changed. But these are the firm dates now that are also in the registration system, PeopleSoft of the university. So um, now, with respect to the cases, all of the material is in the cases. So if you read the cases, you will be very, very prepared for the exam. Now, I will go through some of the selected parts of the cases, and that now I am sorry that this happened. This is a pop-up which shows up every once in a while. I do not know why. This is the MSFT, basically MSN network website that may pop up, but it should disappear instantly. But it will happen. It may happen a couple of times. Then the note on option valuation. This is a purely purely theoretical. I should not say theoretical. It is basically the mathematical derivation of the two-state or the binomial option pricing model. Now, I suspect this may have already been covered by Jaideep Shinoy. My approach is slightly different from Jaideep's, but we will get the same answer. Now, am I correct that he has already covered this in class? I think I remember Peter. Peter, can you hear me?
Yeah, I think that that class was taught by Misha Rakamotovo. We are talking about risk management in equity markets, correct?
Okay, good. So you remember the material?
Um, More or less. So yeah, we
Okay,
had
that's
option.
fine.
We had option evaluations. Yeah, we had the Black-Scholes model. Yes.
Yeah, so I mean this model can be derived in different ways. I can see that the binomial has been misspelled. Let me correct that. Yeah, okay. Then the convertible is Mogen Inc., which will be the bulk of the work tomorrow. Then there is a case that I actually included this year, which was not in the outline. So I do make changes every year. There are three or four cases that I have changed here. One of which is the bond prices and interest rate risk. This is something that I noticed that students still have difficulty. There is a lot of material that I did in 5408 on this thing. I know that I don't remember if I taught the fall class for this group. I don't recall. Possibly I did. This is definitely yes, I do recall that. This is definitely material that you should be familiar with. As to how bond prices react, I have covered this extensively in my 6 or 7 sessions in 5310. So this is very repetitive material. However, students still have difficulty understanding it. This particular case will explain away any doubts and hesitations you may have about the relationship between bond prices or fixed income and interest rates. Now, why is it that I included that? Is because of this case, fixed income arbitrage, meaning that how you arbitrage. Uh, does everybody know what arbitrage really means? Are you familiar with this word, arbitrage? What is the definition of arbitrage? Nobody? Have you
Okay.
I think you are right. I think maybe the words could be a little more formal, but the idea is exactly right. But the real issue here is that two assets that have same cash flow over the same period of time and same risk must sell at the same price. So the no arbitrage condition is that two assets that have exactly similar cash flows at the same points in time and have the exact same level of risk must sell at the same price. If not, if there is a discrepancy between the two prices, then you can actually design a strategy to exploit that arbitrage profit. If the two prices, let's say stock A or asset A and asset B, have the same cash flows over the same period of time and the same risk, price of A is greater than price of B, then what strategy would you actually follow to exploit that price discrepancy? Price of A is higher than price of B, although they should be the same. What arbitrage strategy will you follow to exploit that price differential? Buy B and sell A. That's right. Buy the undervalued asset, sell the overvalued asset. Short sell. Why? Because by that buying and selling, price of A will drop and you have sold it, so you will make money, and price of B will increase, which you bought, and you will make money. Now, this particular case is based on a real thing that happened years ago. But the example is what is most important. And this involves two treasury assets, treasury bonds that should sell at the same yield to maturity. Notice that I did not say price. Same yield to maturity. Now, why that is what I will explain when I come to this particular case next week. And many people, students, will confuse, always get confused between yields and prices in bonds. Now, they are very closely related to each other, but they're not the same. And notice that in this particular arbitrage, I did not say that they must have the same price, but I said they must have the same yield. And we will see when we come to this case, which is real life numbers. It uses real life numbers, which is why I like this case. Meaning that this is not a pure textbook example. This is an example made with real data. So, and we will see how we can exploit, or it was exploited to generate hundreds of thousands of dollars. Next is merger arbitrage. This is a little more complicated, and this is a note on risk arbitrage is basically a sort of a mathematical analysis of how to exploit the arbitrage created when there is a merger between two stocks or two companies, A and B. And you will see that now, as I said, that the arbitrage with the fixed income or treasury bonds is not new. It actually happened. You will see the data some years ago, and does not happen now. Not definitely not as often. It may be happening, I do not know, but it is exploited at tremendous speed so that it will not last very long. However, arbitrage in mergers is happening all the time. And there are people, hedge funds mainly, who actually do just this, nothing else, absolutely nothing else. So, does anybody know what merger arbitrage really means? Have you heard that in any class? Oh, that happens all the time, Cliff. That is true. I am definitely talking about a situation like this where one company is buying another company with stock. But your point that the acquirer stock price drops and the target stock price increases is always true. I'm not talking about that. I am talking about a situation where if you know that there is a stock for stock exchange, then if company A is buying company B, then company A will tell company B that for each of your stock, we will give you two of our stock. That means the ratio is 2 to 1. And that creates an arbitrage opportunity. That means that as soon as this announcement is made, arbitrageurs will immediately jump in that transaction. This is also a huge market. And this is one particular instance. And so is the fixed income arbitrage, where people are actually not avoiding risk at all. They are actually trying to exploit the risk.